When I asked which Indian large cap has given positive returns in all of last 10 years, I was in minority as well because my guess was wrong too. Well, as the tagline would say, हर घर कुछ कहता है, ये stock कुछ कहता है. A wonderful stock for portfolio investors. It's on course for 11th straight year of positive returns. In fact, in the last 12 years, this stock has given 2100% returns excluding dividends. That's Asian Paints, of course, in a period when the Nifty is up 295%. Now, that's a compounding of 29% versus 12.5% for the Nifty. In fact, a lakh invested in Asian Paints in 2008 is now worth 22 lakh, again not taking dividend into account. And for good reason. It's literally a stock for all seasons. In the last 10 years, it has never reported a drop in annual revenue or profit. Now, I always compare stocks with sports. All of us remember Virender Sehwag's triple centuries and the 6 sixes that Yuvraj hit, both great players I also enjoyed. But we would seldom remember the gritty 80 or 90 odd of Rahul Dravid in Australia, England or South Africa, which were worth gold. Asian Paints is the wall of Indian stock markets like Rahul Dravid was for Indian cricket. Look at what it's done in the year in which the market's down. In FY12, when the Nifty was down 9.2%, it was up 28%. FY16, when the Nifty was down 8.9%, it was up 7%. And in FY20, when the Nifty was down 26%, it was up about 12%. Now remember, if you're down 26% in a year, the next year you need to make 35% just to break even. That is the importance of doing well in down year for the market. Now let's look at the financial performance. Solid as rock. From 5,500 crores, the revenue has gone up to 20,500 crores. The profit after tax has gone up from 400 crores to 2,800 crores. The margin is up from 15% to 26%. But the one metric where it literally stands out is the debt to equity, finance cost. It's a company which has literally no debt burden. The debt equity is almost nil. It's in fact a cash machine. It has respected its equity. It's never raised equity since its listing way back in 1982. Has never needed any debt as well because cash generated every year is enough to pay healthy dividend, taxes and plow back the money in the business. Now let's look at how the shareholding pattern of the company has looked over the last many years. Promoter shareholding has remained strong. In fact, it's gone up a bit from 49.98 or 50% to 52.79%. LIC has cut its stake from 7.8% to nearly 2.8%. And if you look at who has lapped up that stake, it's FIIs, mutual funds. Retail has come off a little bit. And interestingly, Reliance, which picked up almost a 5% stake right at the start of this big bull run, until this date, it retains this. And now the last but perhaps the most important part of the story. It has done this while keeping the employees happy. The company has always had a reasonable pool of employees. In 2009, it had 4,260. It's gone up to only 6,751 in FY20. The employee cost has gone up from 371 crores to 1,366 crores, meaning it's given reasonable increment every year. And the productivity per employee has gone up from 9.3 lakh to 20 lakh. That's profit per employee. In fact, this year, when most large cap companies were announcing salary cuts and freeze, Asian Paints announced a salary hike. Let's look at what the company's managing director and CEO said. I see this as an opportunity to step in and interact with every single employee and assuage their concerns in an uncertain marketplace. We are not in the hire and fire business, and as a mature brand, have reassured employees that we all are together in this. Big statement. No employees will be fired since it's not the culture of Asian Paints to terminate employees due to loss in business. A great company and a great stock as well. A company which has managed to keep all stakeholders happy. The shareholders, its customers, its employees and the exchequer. I draw these lessons from the success story. Be the best in what you do instead of mindless diversification. Respect your equity and as much as possible avoid taking debt. And take care of your people in bad times because you enjoy good times because of them. Phenomenal stock, phenomenal company, and that's off the charts for today.